My name is Edward and welcome to this week's market update. Spot prices in the UK have increased 2.23% week on week. The MBP day-ahead contract has been shed in value since the start of June 2024. However, a retracement to 76.2 pence per therm on the 16th halted the downward slide, climbing 6.3% in one session. This was supported by above seasonal normal temperatures through much of Europe, outages to Norwegian gas facilities, and the Freeport LNG terminal being offline. However, markets have continued the bearish movement, closing at 73.3 pence per therm on Monday, down 3.8% on the closing price seen on the 16th. Consequently, average UK gas demand dropped 3.8 mcm per day to 88.5 mcm per day, driven by an 8.4% drop in local domestic demand to 55 mcm per day. Demand was supported by a 1.4 mcm per day increase in gas for power demand as weak renewable production promoted supplementing power demand with gas. TTF prices similarly matched the MBP week on week, widening the spread by 0.32 pence per therm to 5.04 pence per therm, promoting UK/Norway gas and LNG delivery to mainland Europe. Asian spot prices increased 1.8% week on week, as rising temperatures still prevail, requiring Asia to remain competitive for LNG tankers in the US market. US spot prices saw a 3.34% weekly uplift as Hurricane Beryl caused disruptions in the south, forcing Freeport to shut on the 7th of July, keeping it offline throughout the period. The MBP front month and curve contracts were up across the board. The TTF followed a similar trend. August 24 prices rose on the back of weather forecasts showing above seasonal normal temperatures throughout August in the UK and Europe. The rise in prices on the near-term contracts had a more subdued uplift from winter 24 onwards. Storage capacities currently sit at above 80% throughout Europe, limiting the risk to future seasons from short-term temperature increases. JKM price curves were varied, re-establishing spreads to Europe for future deliveries as Asia is forecast to pass through the hottest period of the summer in the next week, creating a situation of subsiding risk to gas delivery, meeting demand across Asian markets. The US August 24 and winter 24 contracts lifted 4.6% and 3.9% respectively, as near-curve contracts were more affected by the uncertainty surrounding effects of Hurricane Beryl, limiting exports and potentially damaging energy infrastructure. However, it was announced at the start of this week that Freeport would reopen, indicating the risk of damage from Beryl has subsided. This should see exports increase and a bearish market. Prices for the August 24 contract rose by a moderate 3.5% week on week to settle at £65.95 per megawatt hour, powering a small fraction of the contract's losses since the start of June, when the contract was valued as high as £78.6 per megawatt hour. The front-month power contract matched its gas counterpart into stronger territory, although the gains were somewhat hampered by decreases in both the UK and EU allowance for carbon emissions certificates. These certification requirements contribute to the cost to generate for fossil-fuelled power plants. The UK's fleet of gas-fired power stations remains a dominant price-setting influence on the market for all contracts beyond the spot. There was additional bullish sentiment pushed into the front-month contract by a string of 9 consecutive day-ahead auction outturns for delivery in July, achieving settlement prices above £70 per megawatt hour. These daily prices factor into traders' forecasts of where the August contract as a whole may outturn. Further along the curve, price movements on the seasonal contracts were mixed but insubstantial. All contracts posted price movements of 1%, in a similar manner to their gas counterparts. UK, Netherlands and Italy spot power prices saw a relatively flat week with small percentage gains across the three markets. The latest day-ahead market saw the UK spot price settle at £73.05 per megawatt hour, representing over a 10% premium on the front-month contract, which is priced at £65.95 per megawatt hour. European power prices tend to be linked via the multitude of several gigawatt connections in operation between various neighbouring countries, and the previous week saw a convergence of prices, with French and German markets moving closer to their interconnected neighbours, driven by increasing air conditioning requirements upon a moderate heat wave and cross-border arbitrage. Over the month of July to date, spot prices on the UK day-ahead auction currently average £68.1 per megawatt hour, although this level is significantly lessened due to a period of high wind generation very early in the month. The spot market for delivery on Thursday the 4th of July settled at the lowest point since mid-April, as wind generation topped at 15 gigawatts in the UK and 25 gigawatts in Germany. Some individual hours posted negative prices on the daily auction. Current short-term forecasts show the combination of wind and solar generation will rarely exceed the seasonal normal, indicating that some strength will remain in the UK prompt to the end of the month on the reduced renewable supply. Thank you for watching this week's market update. Be sure to check us out on LinkedIn for more.